Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets cool off from record high levels. Nifty trades around the 12,000 mark. Addition is seen in both 12,100 call as well as put on the options side. Banking stocks too are off the day's high. Both the Nifty Bank and PSU Banking Index cool off from the highest point of the day. Zee Entertainment is the second biggest loser on the index after Subhash Chandra stepped down as chairman of the company. The Supreme Court mandates a floor test in the Maharashtra Assembly by 5 p.m. tomorrow, says the pro tem speaker will preside over the trust vote, which will be televised live. Good afternoon, Neeraj. Well, it's a historic day since Nifty and Bank Nifty, both these indices touched record high levels today.
Yeah, and the cool-off has also happened pretty briskly, especially after 10:30, and we are trading very, very flat. Banks are still holding on, but the Nifty is trading very, very flat in the session today. Hardly any moves there. 0.5% for the Nifty Bank, well, not quite the performance that you would expect on a day when the markets hit fresh highs. It'll go down, as Navneet said, in history as a day which is done well. Just, very quickly, this is what I wanted to point out. I mean, this is still November 25th, of course, from the time that we last hit fresh highs for ourselves. And look at the kind of contributions that has come in. We've only seen financial services and FMCG do well, and within stocks as well. Since June 3rd, which is the day when we hit highs, the percentage contributors to the Nifty rally include Reliance, ICICI Bank, HDFC Bank and Lever. Again, goes to show that financial services and to an extent consumption are the only ones which have really aided the move. Again, Bajaj Finance, Asian Paints, Kotak Bank. Consumption stroke financial services. Let's see if indeed if the rally is to go ahead, some of the other sectors contribute or no. What's the scene like in the session today? These are the laggards, of course, and almost everything that is participating in the last few days have largely been laggards for our markets in the last 6 odd months from the last time that we hit the highs till now. And PSUs too out there. I mean, we've seen the PSUs start inching up a little bit, but the rally since then has not had PSUs really have a meaningful move. In fact, the PSU banking space is the worst performing index. But that is for the last few months. What about today? Look at the falls that have come into Bharti Infra Z. Bharti Infra was the top performer yesterday and down in the session today. It must be traders' nightmare to trade the Bharti twins. Some of the consumption metal names, the likes of JSW Steel, for example, have come off. TCS, some of the top ideas from a lot of experts, has come off as well. What is done well? Yes Bank and ICICI Bank, and likely ICICI Bank seeing the effect of the MSCI rebalancing. Dr. Reddy's, ONGC, Titan are amongst the names, and select names like Reliance Industries are giving the support as well to the market. So the going is okay for the time being, but they are nowhere as good as it was when it started off. And let's see if indeed this polarized nature of just a couple of indices performing stays true for the next few months as well.
Started, it was just actually 1/3% in terms of gains, because when we had to scale the record highs, it was just 30 points away. It just did it so quickly. So now, I mean, you're just seeing a little bit of a cool off coming back in, and the historic mood of the market, which has been the case for the last 3 weeks, is somewhat kicking in once again after making those record highs. For the mid caps, we're slightly under this afternoon after seeing a decent start. So what the mid cap index is doing this afternoon is down about closer to 1/10% or so. Coming to individual movers then, and some stocks which have really done well. Inox Wind, I think this is the second or the third straight day that the stock is amongst the top 2 or 3 stocks in the Nifty 500, so it's really doing well. Aavas Finances, ever since that upgrade and that target price increment to about 1860 that came about, the stock has been extremely active, and today also, being one that has that niche, that stock is up about 6%. ITD Cementation, we spoke to the management, and their order books is completely strong. They've spoken about growth in the future as well. Stocks up about 3.5% on the back of already the kind of moves you've seen in the recent past on volumes which are 243 times the last 20 days average. So that's looking really strong. Vodafone Idea, DCM Shriram and Reddington, these are all the stocks which are witnessing heavy profit taking. DCM Shriram and Reddington both were up in double digits yesterday. Coming to some volume buzzers, Gujarat Gas trades with volumes more than 120 times this last 20 days average. That stock's up 5.5%. Magma FinCorp locked up on upper circuit and just dialed 16 times more than the average 20 days volume, and the stock's up 5%. Nearest 52-week highs, you've got stocks like Jubilant Food, Adani Green, which is closer to that 119 mark. mark. That's its 52-week high, so it's just about hovering around. And Divi's Lab, which has its 52-week high somewhere around 1,085, that stock's very close to making its 52-week high. And 52-week lows, stocks approaching 52-week lows. One includes the Sarda Cropchem. The low falls at 217, it's at 221 right now. Omax and Allahabad Bank, which is about 23.5, I think it's already at its 52-week low right now. But also important to keep a track of what's been happening in the more liquid universe, the derivative space, considering this is the last final week of the November expiry. Navneet joins in for that. Navneet, good afternoon.
Good afternoon, Davina, and thanks for that. While yesterday we did see sustained buying momentum throughout the session when Nifty rallied about 150 points. Today, of course, there are signs of profit booking which are coming in around the all-time high level. So as we speak, as you can see on your screen, the rollovers have picked up from yesterday's close, currently at about 33%. But even for the November Nifty futures, we are seeing an uptick of about 6%. Pull up Bank Nifty, which witnessed open interest addition across the board yesterday of 2%, and that too is seeing some uptick with regard to rollover at about 32%. Let's see how the rollovers towards the end pan out, but volatility definitely seems to have cooled off while the markets touched record high levels, but I believe it's also off the day's low because we had inched very closer to the mark of 14.5 today. On the options front then, 2 days to go for the monthly expiry, and you've got two strikes which are pretty active in today's session. This is of course the distribution for this Thursday's monthly expiry, and as you can see, 12,100 call has added 10 lakh shares. Premium is somewhere about 44 points, and of course the maximum premium has shifted from 12,000 to 12,100 call now. Pull up the 12,100 put, that too has added, that's the 12,000 put which has added 4.5 lakh shares, but the 12,100 put too has added about 12.5 lakh shares, is something which I can check on NSE's website. Combine the premium of both these strikes, it's giving you 100 points. Now if somebody wants to play a short straddle till the expiry, the range that you can get is 12,000 on the downside to about 12,200 on the upside. In terms of individual stock futures, BPCL, the stock's down for the fourth straight trading session today, and there is significant build-up which is coming on the future side. Of course, it's been an outperformer so far this year. As you can see, even the November futures open interest has surged nearly 27%. Rollovers currently at 40. Z is the other one where second straight day of shorting has come about, and of course the news came in post-market as yesterday that Subhash Chandra stepped down as chairman. The stock's now falling, by the way, towards its 100-day moving average. Also on the cash side, it's fallen on very high volumes. As you can see on your screen, the white line projecting today's volume vis-a-vis the average volume of last 20 session. Lastly, we do not discuss Grasim, but there is some bit of shorting which has come by. Fresh short positions have been seen on the future side, and the stock today, after tumbling about 4%, I think it's a day's low. It was taking support at its 200-day moving average, but I guess now with the current fall, it may have breached that 200 mark in today's trade, indicating traders building short positions here.
All right, let's get into Market Voice. Prashant Prabhakaran of Yes Securities joins us right now on the show with his thoughts. Prashant, good having you, and thanks so much for joining in. We may have nudged those new highs, but we've come off as well. Now, the question on everybody's minds is, is the situation set for our markets to continue the momentum unabated, or will things like expiry and the political situation and the fact that the GDP numbers come out later this week dampen the excitement?
So Neeraj, the call from our side is slightly unique. The overall economy still is trying to gain ground. Basically, it's trying to flatten out and create a bottom which is there. But Nifty will continue inching ahead is what our target is. The 2020 target that YSL has set is ranging from 12,700 to 13,000 is the range that we have taken. We believe that the markets can end up delivering this in the first 6 months of next year itself. That is going to be there, the financial year, the calendar year that we are talking about. Unfortunately, the broader markets in the mid cap and the small cap won't participate in this rally, so it is going to be a large cap led rally that is going to be there. In case you have to get into mid caps, it is a bottom up approach that will work out. From a perspective of Nifty alone investments, our belief is that it will grow, but on the strength of few stocks alone.
Okay. which are those few stocks, Prashant? Are they going to be the usual suspects, the ones that we always talk about, your HDFC Bank, your Reliance Industry, your Bajaj Twins, and these are the kind of names that we've been hearing time and again as being wealth and value creators that have been supporting the index as well, all up until these new record highs that we've made. So are these going to continue to remain the favorites?
So the three stocks which actually contribute nearly 40-45% of our model portfolio is Reliance, which takes a good 15% in our entire kitty that is there. The reasons are simple. The capex cycle has played out. It is also going to be a start of a tariff war increase that is going to happen, which will benefit a lot of other telecom providers that is there. And it's time that the ROC, as far as the investment that Reliance has made into the telecom space, will start playing out as far as valuations are also concerned. The second one remains ICICI Bank. Again, a very strong 15% pitch as far as the model portfolio is concerned. The reasons are simple. It is both a strong liability franchise that is there, and it is a play on both the corporate as well as the retail book. The retail book has been consistently growing. The corporate book, thanks to the write-offs that they had taken, which were very aggressive earlier on, as and when resolutions start coming in the NCLT process, a large beneficiary will be ICICI. So apart from the retail growth that is there on the opposite side, ICICI will also benefit from the corporate cycle takeoff that will happen in the next year or so. Lastly, the third most important stock in our portfolio remains to be Ultratech. The reasons are simple. The largest player as far as cement manufacturing is concerned, there is no fresh capex that we envisage for the next 3 years that is there from this company. They have cash reserves in their end, which will end up making them look at fresh acquisitions to use this utilization well. And they have changed their strategy of looking as a global player. They are going actually district wise and breaking down targets and cutting prices wherever it is required to make sure that they end up getting market share. So the present utilization, which is at around 70-72% of their capacity that is there, will easily inch up a minimum of 5 to 6% that is going to be there in the next 6 months itself. These three form the bulk of our portfolio which is there.
Okay. What have you made out of the recent rally in some of these cyclical names? Metals, obviously there have been external triggers just to create this buzz in this space, but is that going to last according to you? And is this the time, they've been out of action for a really long time now. There's been no sort of interest that we've seen from the investor community, obviously reasons well known, but do you see things changing materially for this pocket?
So your cyclical names will continue to have trading bets that are going to be there at any point of time. They are not going to be long-term investment stocks into our portfolio because of the simple fact that we do not envisage, at least for the next year, the global problems that are there as far as trade is concerned to subside easily. The volatility will continue and the demand pickup is going to be at least a couple of years away from here. So in that case, riding a commodity cycle at this point of time might not be the right strategy if you are a long-term investor. For trader, it is short-term funds. You might as well have news-led rallies to end up building up positions and exiting as soon as possible, but not long-term, please.
Okay, that's the view coming in on the metals pack. Prashant, off late, the other pocket which has been active is the pharma space, and of course this has been a laggard for the last 3 to 4 years for various reasons, be it pricing pressure or observations coming in for a couple of the plans that these companies have. But do you think going ahead this can be the dark horse in 2020 and one can expect better returns?
No, in fact, the three sectors which we have given an avoid in, one of them is pharma, which is there, that we have talked about because of the simple fact that we just have not got our act into place as far as taking care of regulatory hurdles that we have been facing continuously over the last 4 or 5 years. We have just not managed to end up, the promoters have just not managed to make sure that they end up having a clean slate as far as regulation is concerned, and as far as pricing is concerned, it continues to be an area which is going to be soft. So in case you really want to look at, the only stock that we had under our coverage which we had given a buy for was Ipca Labs. Unfortunately, it is at a 52-week high, and the pricing that is there as far as the stock is concerned has become rich. It's a good stock to have in your portfolio because it is a largely India-facing story, but it is better to hold on. Apart from the pharma pack, the other two packs, because of valuation which we had stayed out from, was the consumption pack. Clearly there has been some amount of slowdown, and the valuations which have been given to these stocks have been pretty high. So if you stay out of these sectors, it's a bottom-up market. You cannot end up looking at sectors any longer. The next year is going to be, even in mid-caps, as I said, the broader mid-caps won't participate, but there are very few individual mid-cap companies that we have selected, which will be part of a portfolio that you will create for the next 2 or 3 years.
So you're expecting that the move that will come, the target that you've given on Nifty, or even for the broader markets, it will be a polarized move, the one which we have seen this year. In fact, the small cap index is still down 40% from its all-time high levels. Having said that, you also highlighted that you have identified certain stocks from the broader markets. If you could discuss that also with us.
So in the mid-cap space, there are 3 diverse sectors that we have looked at. One is the defense sector that we have looked at, which is Cochin Shipyard that is there. They have their entire investment cycle again is completed out here. They have order book which is practically 6 times of what they have had earlier on. And it is a matter of getting the defense contracts that are there going to be from the government, which is going to continuously come in, available at fairly cheap valuations, because PSU market has been overall, the PSU pack has not been treated well for the markets. But this is a sector which this is a stock that we should keep on looking at and having in your portfolio for a long term. The other 2 that are there, one in the cement space, the Birla Corp is something that we have ended up looking at. They are very strong in the central India portion of it, where the demand has been consistent. They have been growing well. Again, their capacity utilization is practically at around 70%. There will be a pickup in this demand. They are a beautifully run company with a management which is pretty aggressive in that sense. Last in the space is from the wire space that is there, which is Polycab. Presently at valuations which are pretty attractive, but they'll continue doing well overall. They have investments that they have already made into this space. So none of these are going to, all the 3 segments that I've talked about are not going to have any capex pressures or fresh debt into their books, at least for the next 3 years. And as I had told earlier when I'd come into your channel, that raising money to make sure that the momentum continues is going to be the toughest challenge over the next 1 to 2 years. That phase continues. So you look at companies which have already invested and are to reap the rewards of the economy becoming better in the future.
All right. Prashant, we'll leave it at that. Thank you very much for joining us and highlighting all your stocks that are there in your coverage and that you're focused on at this point in time. So both well distributed amongst the large caps as well as the mid caps. But as the markets scale new peaks, let's also listen in to some of the market voices who spoke about the road ahead for the Indian markets. Listen in.
Small cap index is down, I think, around 40% from its all-time highs. Portfolios are still bleeding in the red, and that's the real problem. But then from the foreigners' perspective, if you see, the foreigners are still net short in the derivatives market. They haven't covered their shorts yet. And if you go by anecdotal historical evidence, till the time foreigners go net long in the derivative markets, Nifty doesn't sustain its all-time highs. So either the foreigners have to come and cover back their shorts, or we'll just keep flirting around these 12,000, 12,100 levels. But for us to decisively break through and move towards 12.5 and 13,000, which we expect that should happen over the next 2, 3, 4 months, the foreigners have to come and buy big time lock, stock and barrel. So, but then that's the thing to be watching out for if you're a Nifty observer. But if you're in the mid and the small cap, then the story is almost the same as it was 6 months back. So it's a very selective market, a narrow market, a focused market, a market which respects earnings, a market which goes up on earnings, and there's no question of hope right now. So I mean that way, if you are buying companies basis earnings, I think you'll do fine. You're doing fine for the last 2, 3, 4 months. That's not a problem. But there is no broad-based, buy all kind of stuff right now. You go and you buy anything and it starts going up. So I don't think that's going to ever happen over the immediate short term. But over the medium term, I think the government has decided to do something for the budget. And this is an anticipation of the pre-budget rally. If some big bang announcements come during the budget, I think the market will rally before. Salute the government for that. And post the budget, when the news comes out, I think we might have a correction. But this is just the start of a pre-budget rally. I think something big is coming in the budget. That's what the screen is telling us.
Every time we've had an extremely tough macroeconomic year, the subsequent year has been a very good year for equity returns, right? If you look at 91 was a very tough year, 92 was great. I mean, if you look at 2008 was a tough year, 2009 was great for markets. 2013 was tough for the macroeconomy, 2014 was great. So I think if you look at it, I mean, if you take the 1-year period starting from when the IL&FS crisis hit us, which was August, September 2018, and then from there to August, September 2019 has been a very, very tough year just before the tax cuts. I think now, we've seen the kind of worst of the macroeconomy and growth, and the markets tend to look ahead, not behind. And I think the fact that the Nifty has hit a new high tells you that the economic recovery will happen over time, but the markets will tend to discount it well in advance.
So the chart setup continues to look rock solid even at 12,100. We have been working with a near-term target of 12,300. So I think we should get there in this current run. But eventually, I think over the next few months, we should see the Nifty moving towards a level of 13,000. So we recommend, an entry even at current levels. One needs to be a little sector specific, and many sectors, which underperformed in the last many months, like pharma and auto and oil and gas, have made a comeback. So I think with a strong base established around 11,700, 800, I think this market is headed much, much higher, and the global setup has got only better. So that's going to help Indian markets going forward.
India's story, I can narrate to you in 30 seconds, but in short, it's a deep cyclical slowdown that the economy has gone to. So here's the 30-second story. In 2013, taper tantrum related shock caused the domestic demand slowdown. Then as the economy was recovering, you had the China and EM slowdown. Then as the economy was recovering, you had demonetization. Then as the economy was stabilizing, you had GST. Then you had elections. Then you had the global slowdown. Now, in this period, you have built a 6-year long, deep cyclical slowdown. And that is the key reason why the banking system is suffering. So India's problem, I think, is really now just not having any other one-off measures being taken by the government. And as that global recovery comes through, we think that India's economy will be on the mend, finally. When I say that, there is nobody who believes in it because we've been belied of that growth story for so long. But I can practice my macro by just on the basis of what has happened in the past. When I look forward, I think India is finally likely at a place where it will be able to deliver that recovery.
While the markets may have given up all its gains as Nifty is in the red, but let's continue our focus on the markets and get you another big voice, and that is Atul Suri of Marathon Trends, who is extremely bullish on the Indian markets for the next 2 to 3 years. Yash Upadhyay had a chance to speak to him at the CMT conference and began by asking him about the outlook on the Indian markets. Listen in to that conversation.
Indian markets also hostage to a similar situation. Bad macro numbers, corporate numbers, distress. So the headlines are all bad. Right. But the market's pushing. The Sensex is at lifetime, made a lifetime high, and the Nifty is kind of one good day from there. So the thing is that in all this gloom and doom, the markets are doing something very different. And at the end of the day, I personally think that going ahead, I think for the next few months, we may have a market that seems to be a little sideways for the month and a half, but I think that'll be a great time to invest because the big trigger, the next big trigger for Indian markets, I think is going to be the budget. because the government definitely is in an activity mode, and we've seen that with some major tax cuts. I do feel that the budget could be an interesting space, and the market, based on what's likely to come out of the budget, will not probably wait for the budget. So I think that we will have a very exciting Jan. November and December may be sideways. You may have a little bit of churn. And what you're really seeing right now is an oversold rally. Stocks that were beaten down or sectors that were beaten down seem to be having the highest moves. Like you see pharma do well, or you see some distressed NBFCs do well. They're doing very, very well. Some media companies doing very well. So what you are really seeing is an oversold bounce, and I think that will happen. The frontliners, the leaders are resting or slightly correcting. But I really think that the trend has not changed. I still remain very bullish in India. If we get our act together in this budget, we do the things which investors would like or perceive to like, I feel that the market can actually break out and make a much, much higher, backed on global market strength. So to put it in short, I think the markets would be sideways to slightly choppy in the short run, a month and a half. But I think January onwards would be very interesting, and the decision point or the turning point could be the budget. So fingers crossed, and we are, as I said earlier, we are in a global environment which is extremely bullish.
One of the most important things to note over here, especially when we talk about the benchmark indices, is the market cap polarization. While we are looking at record highs for both the Nifty as well as Sensex, a large chunk of those returns have been on account of the moves that we've seen for a handful of stocks, be it your HDFC twins or the Bajaj twins and Reliance as well. Going forward, if you are this bullish on the Indian markets, do you expect the market width to broaden, or will this rally be as narrow as the one that we've just seen?
So you're already seeing that the market breadth is improving, and that's very, very important, because to have a sustainable bull market, you need market breadth. 50 stocks alone cannot drive the market. So the broadening of breadth actually creates a bit of a floor. And as I said, the next 1.5 months, we will see this broadening of breadth. But that does not mean that if the breadth broadens, these 50 stocks are not going to do well. They've run very hard for 2 years. They've held the market on. So they may rest for a month and a half. But I personally think that this is where the earnings will continue to come, because as such, we are still not seeing a broad economic revival. Until that doesn't come, a lot of these stocks may have a short covering rally, but for them to go ahead and make new trends, make new highs, you will have to see actual numbers flowing through. And as far as these 50 stocks go, the numbers are there. Yes, you may view them as expensive, but at the end of the day, markets are going to reward numbers and rewards growth. And I feel that post this rest period, these stocks or this set of stocks will break into new highs.
Right. Financials, I want to touch base once again, because that's a huge sector. It has your private banks, your PSU banks, the AMC space that is doing extremely very well. The insurance stocks, they are also doing very well. Within the financial basket, which are the pockets that you see the maximum amount of value emerging?
So again, the question is about where the maximum value is. I don't know where the maximum value is, because value is relative. I look at growth and I look at prices. I think that there are two interesting sectors. Again, they have run up, etc. People have counter arguments. But if you look at the financial services and two spaces in that, whether it's insurance and AMCs, the market is telling you that. I feel that they can be very, very interesting sectors going out. Again, I'm not recommending you go out and buy. Please do your own research. But what I feel is that they have the triggers, or they have the recipe for being very long-term trends. And obviously, that gets me interested.
The government has clearly shown a lot of intent in terms of coming out with reforms, and you also mentioned that this is the key budget next year. The market seem to be factoring it already. In that case, what is your long-term target for the Nifty and the Sensex for the next year?
I personally think that this breakout post 12,000, which I think we'll see, gives me a kind of a first stopping point around 13,500. Which would be a 12 to 16 months target. So I'm very, very bullish in the market for the next 2 years. I think that we've had a phase of underperformance. And when I do cycle studies of markets, I see that Indian markets tend to be corrective or resting for a 2-year cycle, and that becomes the genesis of the basis. So I'm extremely bullish for the market on the next 2 to 3 years.
All right, 13,000, 13,500. We've got really optimistic comments coming in from the two technical analysts that we heard so far. So let's bring in, our live technical analysts right now who are going to dissect the market for you in terms of what kind of trades you can take going forward. Aditya Agarwal of VS Securities is joining us right now on the show. Shortly, we'll also be joined by Brijesh Singh of Stock Access. But, Aditya, let me start off with you. We hit a record high in today's session, but it looks like the excitement just fizzled off towards the second half of trade. But does that give you an opportunity?
Yes, absolutely, Devlina. So probably on a correction, I would recommend getting into the markets somewhere around 12,050 to about 12,000 should act as a strong support for the market post this breakout, the morning breakout that we witnessed. If 12,000 holds on the downside in this correction that we're witnessing, I would not shy away from taking long in the markets. Probably my targets will be somewhere around 12,170 to about 12,200. We should be there by next week or probably in a couple of weeks' time. 12,200 should be on the cards. On the downside, 11,900 will be my stop loss for long trade, somewhere around 12,000 to 12,050.
Okay. What about individual stocks then?
So I've got a couple of buy recommendations. One is Britannia Industries stock. Post correction has resumed its upward trend. Yesterday made a hammer pattern, and it's a follow-up buying that we're witnessing in the stock today. So a buy on Britannia Industries somewhere around 3,070 for targets of 3,185, putting a stop loss at 3,000. The second stock again is Bharat Forge stock. Went through consolidation. Post that it broke out and retested the neckline, and now it's resumed its upward trend. So that's a confirmation of a bull trend reversal, which tells that there's higher levels to be seen in the stock. So one can go ahead and buy at current levels of 460 for targets of 485 with a stop loss at 441.
Britannia and Bharat Forge are the two buy calls. Aditya, what about ICICI Bank at lifetime high levels now? Would you take a bet?
I would not get into the stock at current levels. I would avoid fresh longs at current levels. If somebody is holding on to the longs, probably hold on to it for targets of 5,115 to about 520. That's the maximum upside that I see in the stock. Apart from that, fresh longs I would definitely avoid because the risk to reward is not in favor of going long at current levels.
Some interesting moves coming in. Godfrey Phillip, that counter is up about 9%. And remember, as a pure play on the cigarette side, this particular company has been outperforming ITC at least, be it in terms of volume growth in the last few quarters, or you can take the price movement as well. 8% higher, 12.55 is the level where it's currently trading, and the volumes, Aditya, have been, I guess, decent. What are the charts indicating? Is it poised to touch its 52-week high levels?
I believe so, yes, definitely. So the last time I was on channel, I had recommended VST Industries, which is again in the similar segment, and it's trading at all-time highs. Similar is the case with Godfrey Phillip. It's a massive up move in trade today, backed by extremely healthy volumes, as you just mentioned. I'm looking at a target of 1,400 if somebody buys at current levels of 1,250. Put a stop somewhere around 1,150, and 1,400 should be seen on the cards probably in the next 1 month or before that as well.
Okay, so one can look to buy Godfrey at current levels, and according to Aditya, it is poised to move higher. IIFL is the other stock which is up 15%. That's IIFL Finance for you, trading at levels of 160. You've also got something like Indoco Remedies, which has surged 11% in trade, and almost 3 lakh shares there have been traded right now. This is at Deza. Anything on Indoco Remedies charts at 172?
So yes, stock has broken out from its long-term moving averages, so it's trading above its 150 and 200-day moving average. So that's a positive trigger for the stock. I want the stock to close above its 200-day moving average. It's made an attempt a couple of times previously, but it failed to close above its 200 EMA. So if it closes above 170 mark, I would definitely go ahead and fire long positions in Indico for targets of 180. That will be my initial target. If 180 is taken out, the next target I'm playing out with is 195. So there is up move definitely on the cards. Volumes are healthy. I would not shy away from taking longs above 171 if it closes.
The other bunch of stocks that we also need to watch out for, I think Brijesh Singh of Stock Access is also joining us on the show. But remember, we have a bunch of stocks which will be seeing MSCI weighted changes come today. So watch out for all of those names. You've got stocks like ICICI Lombard, you've got ICICI Bank, which sees a chunk of closer to 1,100 crores that comes in. DLF is the other one that witnesses some amount of rebalancing. I think we have that graph to show you the individual stocks and the kind of flows that each of them would see probably by the end of today.
Yeah.
But Brijesh, before we get onto your index call, I just want a quick take on some of these names. ICICI Bank at 52-week highs at 509. DLF has continuously been doing well. What's your take on either of these two, DLF or ICICI Bank?
Good afternoon, Devina. One of my pick is ICICI Bank. Now, if I talk about the ICICI Bank, in today's session, we have witnessed a stock making a new 50-week high, and when the time of posting my call, it was trading at 505. I think if I'm not mistaken, 510.90 is the 50-week high. Still, overall, the stock is looking promising. Dip should be used for accumulation purpose. I'm looking stock should not break the 498 or 495 odd level, and the chances are that stock might even test the level of 518 to 520 band in a short-term time frame. But really, for a momentum point of view, has been concerned. The strategy which I have been posting is that if it trades somewhere around 505, one can look out to buy ICICI Bank with a strict stop loss of 498 and play for the target of 515 to 517 zone.
Okay, that's on ICICI Bank and on DLF. And I think we have that place. So just a quick run through of the kind of flows that you can anticipate in some of these names that will come up on your screen. So SBI Life for one, the inflow of about $360 million. ICICI Pru another 188. Info has been doing well up until now, and so has HDFC AMC, which could see an inflow of about $132 million. Asian Paints, DLF at 120, and even Colgate for that matter at 108. On the exclusions, remember Yes Bank for one, but much of it has already happened. So may not see any incremental losses coming in on that one or an incremental outflow. But I just actually want to know what the positions on the derivative side for Yes Bank are also, if Navneet can probably just look that up in terms of Yes Bank and what it's doing. But in the meantime, Brijesh, a quick call on your own stock ideas.
See, before the stock idea, what I was been witnessing for the Nifty is that if Nifty trades below 12,040, taking a Nifty spot value, looking for on long side, would be fine. And I'm witnessing it should not break the 11,990 mark. That is my stop loss. It's been concerned, and I'm witnessing if this stop loss holds, then the Nifty can jump to the level of new 50-week high, and I'm witnessing at least it can jump to the level of 12,155. Whereas overall the trend of the Nifty has been concerned, still it is looking promising for a short-term bet has been concerned. Before this expiry or might be next Monday or Tuesday, Nifty might even try to touch 12,200 marks or say 12,240 zone, which is the next hurdle for the Nifty. And in that way, Nifty on a downside should not break 11,900. So the broader picture is on a downside, it should not break 11,900, and on the higher side, 12,240 is a level which I would be witnessing. Now, regarding with the call has been concerned, as I've said, ICICI Bank is looking promising to me. 515 I would be playing for the long side with the stop loss of 498. Whereas on the other counter, NMDC, it is looking weak on the chart, and the stock from a level of 74, it has shooted up to 115, and after that 23.6% retracement value. If we take this two value, the 23.6% retracement value comes around 105, and even the stock has been roaming around this 200 is simple moving average. With increase in volume, it indicates that the chances are that stock might break the level of 200 simple moving average. So taking all this view, summing up, one can go short in it. With a stop loss of 105, play for the target of 98. Time frame to hold this counter would be till this expiry.
By the way, I must say that the equity markets are now down about 0.5%. Now, all through the last couple of days, we've been trying to stay away from any kind of correlations, but just that the whole setup seems to be pointing towards that. The Bank Nifty is also in the red, by the way, and this has happened after. I see two tweets, one from ANI on how Devendra Fadnavis is going to address the media at 3:30, and Sanjay Pugalia of Quintillion Media has put this out as tweets that Ajit Pawar has resigned. and that's a big breaking news about 7 or 8 minutes ago. So keep that in mind, but the timing is fairly uncanny that that has happened in this bit of a pullback that's come out in the equity market. So you got to keep that at the back of your mind. Just before we get to Dharmesh Kant, and he's waiting patiently for us, but just before we get to that, very quickly, Brijesh, 30-second view, would you go out and trade the Nifty or the Nifty Bank currently on the short side?
See, if Nifty breaks my the stop loss of 11,990, then one can go on a sell side with a stop loss of 12,040 and look for the target of 11,900.
Okay. So, well, keep that at the back of your mind. Well, here's Dharmesh Kant of India Nivesh. He joins us right now on the show as well with his thoughts. Dharmesh, good having you. Thanks much for joining in. He scaled highs, but there are a bunch of pockets which are facing some individual issues. Now, my question is with regards to the top loser on the index first, which is Z Entertainment. Well, it's going as per script. The resignation of Subhash Chandra shouldn't come as a surprise as well. But after the first 2 days wherein the stock went up double digits and then saw follow-up buying, it's come off quite hurriedly. What's happening here?
Yeah, good afternoon. I think some, rebalancing of the trades which have happened in Z Entertainment, and say market participants take all types of bets when they are entering into a stock. It may be an investment bet, it can be a trading bet, it can be a events-based kind of an activity. So I think it's more to do with event-based activity in Z Entertainment as of now, and more of a trading bet which is getting unwinded. So the stock has come off. The only, caveat is that since Mr. Subhash Chandra has resigned and he won't be, it is presumed that he won't be actively monitoring the businesses, day-to-day affairs of the company. So he was the person who, took the business to these kind of levels. And there was nothing wrong with the business per se of J Entertainment. It was his other, business forays which resulted in the debacle which happened with him. So I think that is a concern which people will have, like the mentorship and the carry forward of the business actively, whether that will be in place or not. And that is the reason why we are seeing some profit taking happening in Z Limited. So my own sense is let some more days pass by. We have seen a long way in Z Limited. So a couple of weeks from here will decide the future course of action, because in India what we have seen largely it's like businesses are driven by people, person specific who have been the mentor of the business. There are very few examples where it has taken a corporate shape. So that question needs to be addressed, and that is what the market is trying to find out as of now.
Okay. Yes Bank, and should pull that up. We were discussing that counter, and the stock has flattened out in terms of the move. It's petered off from the highs of the day at 64 now. But the market-wide position limit, are they suggestive that this could possibly be a stock that could go in the ban and therefore no trades ahead of expiry?
No additional? For last 2.5 to 3 series, we've not seen any stock going into FNO ban besides Just Style. I think in this particular series it went for 2 or 3 days. I was just checking the data. As of yesterday, closing market-wide position limit definitely was on the higher side, 92%. And for a stock to go into the FNO ban, it has to breach the 95% mark of MWPL. This is also the expiry week, I'll say. Of course, you will see positions being rolled over for December series, and there will be unwinding of positions too taking place. So what I can see right now, at least on the futures and the option side, it could surpass that mark of 95%, but it also remains to be seen towards the end how many actual positions are rolled over and how many are unwound. So it's definitely very, very close to getting there, but I think we'll have to wait and watch for the final data here. But Brijesh, looking on the charts for Yes Bank, at current levels, it has been facing some resistance around the mark of 70. That's the option call strike, which has been sitting with maximum open interest as well. What's the range that you would advise on this one? Of course, it's a high beta stock, but if somebody still wants to take a punt here, what would you advise?
See, Navneet, as you have said, it is a high beta stocks. So whether you are trading on a long side or a short side, be strict with your stop loss. Now the trend what I am been witnessing right now is indicates me on a sell side. So 64.30s on a spot it's been trading, keeping a strict stop loss of 66. If someone wants to go short, then he can go short. And on a downside, I'm witnessing a minor support at somewhere around 62. And if that thing has been wiped off, then the stock can even touch a level of 60. So play for 60 with a strict stop loss of 66.
Okay, you can play for a target of 66, but please place that stop loss of about 60, considering it is a very, very high beta counter. All right, telecom stocks have been weak right from the word go today, be it Bharti Airtel, Bharti Infratel or Vodafone Idea 2. All of them have seen correction. But remember, these are the stocks which have also moved high in the last few days. Some profit booking definitely kicking in here. Dharmesh, particularly for Bharti, considering all the three players have announced tariff hike with effect from at least Bharti and Vodafone have announced with effect from December. You also had a couple of brokerages increasing the target price for Bharti Airtel. And what did you make of the tariff hike? Do you think this can be a game changer now going ahead in the telecom space? And can Bharti Airtel witness any sort of fund flow coming in on back of this news?
See, even if it's going to be a game changer, the game changes for Reliance only and in their favor. So because if they are already garnering the market share, even if you look at the October data, there were subscriber outflows from Bharti and Vodafone, and they moved into Reliance Jio, and going forward they will be garnering more and more market share. That is purely my own sense. And the tariff hike, if they have done, and tomorrow Reliance Jio also does, so who benefits the best out of all these tariff hikes? It's Reliance Jio, because they are having the more and more subscriber and it's adding to the kitty. Bharti, it will be very difficult for them to compete, because the type of debt they are sitting on, that is already there in the balance sheet. There's nothing doing away with that. And government has categorically said that that AGR issue is a Supreme Court thing and they have to pay that. Only the moratorium is on the spectrum charges which they were to pay. That has been delayed for a couple of years. So I don't think the situation has become so tightly knitted that it's very difficult for either Bharti or Vodafone to garner back the market share from Jio and improve their cash flows. It cannot be. The only thing which can happen is some big equity infusion comes from some big player in either of them. So Vodafone, the case is already ruled out, because the Vodafone already is a big player. But as far as Bharti is concerned, then it will lead to stake dilution, and again the valuations and equity will again undergo a terrible kind of a change if all this happens. So that's the only way out for Bharti, which I don't see happening as of now. So stock prices have run up. It's very, it's one, if somebody has bought it, they should be fortunate enough to take profit out of Bharti. And if you want to be really invested in the entire telecom space, it has to be Reliance Industries. That is the best option available to my mind.
Okay. Still, gentlemen, lots more to talk about, but also important to watch out for individual stocks and what brokerages are saying. Maybank has initiated coverage on ICICI Bank, indicating a potential upside of 20% for the private lender. Shafali Malik takes us through the rationale behind the same. Shafali.
Well, they've initiated a rating on this particular counter with a buy rating and a target price of about 598 rupees per share, and they expect the ROEs to increase 5 times to about 15.2%. And according to them, the key catalysts include increase in the retail lending, which is pretty much visible according to them, reduction in the NPAs and credit costs, and also increase in the market share. They are saying that emphasis on the retail market is pretty much visible, especially after the new MD and CEO, Mr. Sandeep Bakshi, took over. Their retail share has gone up by about 3 percentage points, and also they're riding high on the second highest CASA ratio among peers. Their capital adequacy ratio of about 16.1% will help them further in gaining market share. Also, they're adding that growth qualitative change is going to narrow the valuation gap with the peers, and now it's their top pick in the financial sector, followed by Axis Bank and Edelweiss.
Okay, and since you're here with us, also tell us about Axis Capital and their rationale for hiking their price targets on SPI.
Well, one of the main rationale for hiking the target price for State Bank of India is the kind of value the subsidiaries are generating, and we know that SBI Card's IPO is coming, so that is primarily one of the reasons why they've hiked the target price. Other than that, also they see a couple of tailwinds emerging for State Bank of India in the medium term. They're saying that NPL concerns have receded and large risks in some of the sectors such as telecom and NBFC have reduced according to them. A large steel resolution, that is SR Steel they are referring to, has finally already fructified, and that will aid the earnings for them going forward. Strong traction in subsidiary businesses and valuations, which now account for 40% of the SBI's value. So they've raised the estimates for the value emerging from subsidiaries to about 132 rupees per share for purely on account of the subsidiaries' contribution to the SOTP. The core business remains steady. Better margins, declining operating and credit costs is something that will bode well for them, and they expect ROA for the bank on the whole to be to the tune of about 0.8%, ROE 14% in FY22. So they are maintaining a buy rating, and the target price has been raised by 25 rupees per share from 375 earlier to 400 rupees per share now. So this actually validates the story that I did in the morning with regards to SBI cards, that there might be an upside of about 25 to 30 rupees.
Oh yes, it does, Shefali. And if you want to catch that story on SBI cards and the valuation that it's seeking, is there on BloombergQuint.com, so you can go and catch it out there. There you have it. SBI expects a valuation of 53 to 60,000 crores in its IPO. Away from that, then, the valuation discount of mid-caps versus the large caps at a 10-year high. Citi is recommending to selectively add mid-caps post a 2-year underperformance. Yash Upadhyay is here to take us through Citi's view on some of the topics.
That's right, Devina. So one of the key points that they've highlighted is that while in the long term, as in if you're looking at the price performance more than 2 years period, the returns have been fairly normal or in line with most of the other large caps as well as the small caps. But over the last 2 years, we've seen a significant amount of underperformance, with the Nifty mid-cap index underperforming the Sensex by almost 30% in this period. Now, one of the other reasons that they've highlighted is also the fact that the valuation discount of the mid-cap versus the large caps is at a 10-year high. Additionally, while the biggest reason or the advocates of investing in a mid or small cap is the huge growth potential of these companies going on to become multi-baggers and eventually a large cap company, the history shows that only 2% of the stocks eventually end up becoming a large cap, while 20% have ceased to exist. As a result of that, despite being in a better risk to reward ratio, they advise being extremely selective in the mid cap space when it comes to investing in these times. Their top picks, however, in this space is ACC, where they see an upside of almost 46% from its current market price. Their target price for the counter over the next 12-month period is 2,150, followed by Just Dial as well as Biocon, where they see an upside of more than 36 or 37%. ACC, one of the prime reasons being the fact that they expect the second half of the year to be extremely positive for the company, given the price-led growth in the second half, as well as the potential acquisition of Imami's assets by one of the other key players that would help consolidate the space, which would be a big positive for the company. Back to you.
All right, Yash, thanks very much for that. So back to our guest then. We've got a few other names which are active in this space. Should once again just take a quick look at what's happening to pharma as a pocket, because we've been seeing since the start of the trading session that the weakness has come back into the pharma space. The pharma index itself gradually started to peter off just half an hour ago when we took a check, and that's the index for you now. Made a low, starting to rebound from there. So about a third of a percent lower for the pharma index. Aditya, do you have any picks here within the pharma space?
So Lupin is one which actually moved smartly in trade today, and volumes were pretty healthy when it moved up. Now it's given up its gain without a doubt. So I would want the stock to hold levels of 780 to about 775 on the downside. If those levels hold on for a day or two, I would not shy away from initiating long in Lupin for a target of 830 to about 860 on the upside with a stop loss at 740.
Okay, that's a technical pick on Lupin. I think even Biocon is up and about in today's trading session. That has seen some bit of gains. Biocon is sitting with gains of about 3%. Dharmesh, come in here on the pharma space. If one were to look at the September quarter numbers, we did see some margin improvement from a couple of these companies. For example, Glenmark and Cipla's numbers were better than at least what the street was expecting.
Yeah, but that was on two counts. First was a low base effect, and second was more of a domestic business picking up. So India-centric businesses, the companies which are focusing more on that, so there the growth was there. But as far as the US-centric businesses are concerned, the growth was not there. Even the European counterpart, nothing great is happening out there. Pharma as a space to me still looks dull for at least a year. So I think FY21 will again go into more of a consolidation and gaining traction. in the pharma business, because ANDAs, the new filings are not there. The filings which have been done, approvals are not coming as they should be coming in a faster way. So there are still plenty of challenges out there. Just some kind of trading bounce backs may happen in a few of them, and that too will happen where the India-centric business is sizable rather than overseas counterparts. So supply is one of them where you find such kind of a business segmentation more compared to like a Sun Pharma or a Dr. Reddy's. So my own sense is it's more of a trading bet. Otherwise, nothing much out there from investment perspective as of now.
Okay, that's the view on the pharma space. According to Dharmesh, it may take a year more to see some bit of concrete revival, at least for this sector. We've already discussed Z with Dharmesh, so let's take a technical check, because the stock's your top F&O loser. We have seen fresh shorting coming up for Z Entertainment for the second straight day. It was down 3 to 3.5% yesterday as well. Aditya, on the charts, correct me if I'm wrong, I think it's moved below its simple 200-day moving average as well. Would you use this as an opportunity, looking at the trend in the recent past, to buy, or it's a clear sign now one can look to short the stock?
So I would not short the stock, Navneet. The stock has been under pressure for quite some time. You absolutely pointed out correctly that it's turned down from its 200 DMA. So it's failed to cross its 200 DMA. I'll tell you from June 2018. June 2018 it broke its 200 DMA, and post that it made 5 attempts to cross its 200 DMA. It failed to do so. This is the 5th attempt that it made, and it failed to do so again. Having said that, on the downside, 300 is a very strong support for the stock. So if somebody is looking to short the stock, my targets will be 300, not below that. My sense is 300 should hold on for the stock. So somewhere around 300, I might just look to buy the stock for targets of 350, 360 on the upside. And if somebody is looking to short the stock at 320, probably my downside target will be just 300 with a stop at 330. That's a small target and a small stop loss on the upside.
Okay, Dharmesh, before we thank you, just one final question, and that's on the relative underperformance that we were seeing in some of those PSU names like ONGC, GAIL and IOC, etc. GAIL is the top gainer today on the index. Are you bottom fishing in any of these names?
Yeah. I think barring GAIL, ONGC and IOC doesn't merit a call. So it's a completely avoid as far as ONGC and IOC is concerned. But yeah, GAIL one can look at, because the business is there. There's nothing wrong with the business, and the valuation has become more comfortable, and the earnings trajectory which they have been, they would continue to do so. So one may have some sort of allocation out there. But what is looking very interesting and promising is the PSU sector bank play. So I think that is the space where the maximum traction is going to come if the market sustains at current levels, which I think will do till the time the budget is rolled out. And in that basket, Canara Bank remains the top pick for me, considering the way the Q1 and Q2 numbers have panned out. And the likely stake sale of Canfin Home should come through in next couple of months, and then they will be having a QIP. So plenty of equity capital they will have for growth opportunity, and asset wise they have been fairly well compared to other PSU banking players. So that remains the top pick out there.
Okay, Dharmesh, we'll leave it at that. Thanks much for taking the time out and being with us and giving us your perspective. Appreciate your time.
Thank you so much.
The markets have just recovered a little bit. I must mark 2 or 3 names which are doing well. The likes of Hindustan Construction Company, up about 14%. I must say it's had a very good trajectory in the last few days. If you pull up the 1-month chart of HCC, you will see that it's had more. I think the returns are pretty impressive. So should pull up that one for you. Yep, about 55% and more so in the last few days. So that stock is active. Indoco Remedies is active, and from stocks which are doing well, Gayatri Projects, Gujarat Gas and Future Consumer are the ones which have inched up a little bit in the last few minutes of trade. Do watch out for these names as well.
One stock I just want to highlight, I was reading an article on Bloomberg, Reliance Naval. It, of course, these are all penny stocks which have moved down. This one touched its 52-week low of 95 paisa on September
and then went
11.
Up 600%.
Yes, and since then, I think it has not even declined for a single trading session since September 11. From 0.95, it's now trading at levels of about 7.25. I know this is longest time people have been saying it could be the defense play where the company is expecting some bit of orders to come by. But this, of course, looks like more of speculative move as well. But the sheer movement of the stock from 95 paisa to 7.25 in just last few sessions is remains to be seen.
This is similar to the kind of moves that used to happen in Jacob and Reliance Industrial Infrastructure way back in 2007 or 2008. I mean, they weren't these penny names, but the move was this. You wake up in the morning and you see both of those stocks locked on an upper circuit. I'm nowhere saying that this will be the same,
and
just correlating.
And days in you don't get to enter, and then once it starts its journey on the downside, you don't get to exit.
I think that's a very important caveat to put out.
It's a trap that you're getting
this may not be a trap. We do not know about Reliance Naval. All that we're saying is that this up move as well, it's not something that at least we know that there's a fundamental reason behind it. But it's moving up, so we're pointing it out. But 80% of the gains in Indian stock markets history have been in 2 years following general elections, points out Marcellus investment manager Saurabh Mukherjee. Speaking to BloombergQuint earlier today, Mukherjee said that investors are advised to avoid taking risks and opt for high-quality names. Listen in.
This is familiar territory for India insofar as if you look at our stock market history, 80% of the gains in the stock market have come in the 2 years following general elections. So in the 2 years following general elections, if you take the last 10 general elections, in the 2 years following elections, the stock market's given on average 27% per annum compared to the long-term average of 14 odd percent. So nearly double the returns in the years following general elections. And the reason this happens is also very familiar. This reason this happens, typically economic reforms come in the aftermath of elections. The stock market discounts the benefits of the economic reforms. The stock market rallies a good 1 to 2 years before the economy picks up. So very familiar territory for India. We were here in the early 80s, we were here in the early 90s, and once again as we approach the end of 2019 and we approach the beginning of a new decade, we are finding ourselves in territory where the stock market is discounting economic reforms before the economic growth actually begins.
So what's your advice now, Saurabh? How do we tread these markets? What's happening on ground, economic indicators completely divergent from what the equity markets are doing right now. And probably I would read it as a silver lining that we've reached these record highs without any support from foreign institutional investors who still in the derivatives market are short. They're covering their short, but there's still some time to go now. Would you say that leaves a lot more headroom for foreign investors to come in and propel the markets even higher?
So I wouldn't really worry about whether foreign investors come or don't come. I think the way money has been made in India over the last 30 years is extremely clear now. And I think we just carry on doing that. Your viewers can carry on doing that. Nobody out there, myself included, can suddenly become overnight an economic expert and second guess which quarter, which month the economic recovery will begin. I don't think that's a practical, feasible exercise. What we can all do is identify companies which have clean numbers, fabulous franchises, long track records of making lots of money for investors. Those stocks are out there. We go and buy them, and as we've discussed before, people who look at PE and try to make investment decisions, typically struggle in India because you're constantly second guessing the PE multiple, which is not a clever way to invest in our country. But on the other hand, identifying great franchises, clean numbers, high barriers to entry, very doable exercise. Your viewers can do that and buy those stocks, and hold your nerve through what is clearly a very difficult economic climate. Hold your nerve, buy these high quality names. Indian history shows you'll make healthy returns even if the economy takes longer to recover than anybody expects.
Saurabh, to all bulls out there, congratulations, and you guys are managing a lot of people money, so good for you as well. The question is, at times of excitement, does it help to buckle down and be boring? Because we were speaking to Rakshit a few days back, and he said that we love being boring in these markets as well because that is what is making money.
I think in all times, whether it's exciting times or fearful times, it pays rich dividends to be boring in India, because this is an economy, this is a polity which generates enormous amounts of risk. Our political system, our regulatory system generates enormous risk for investors out there. Our economy is still a underdeveloped economy. Our per capita income at $2,000 per capita is lower than most sub-Saharan African countries. We are a poor country. If in a poor country with a volatile polity, you go out there and take risk, it's very difficult to make money. On the other hand, you compress risk. You don't take balance sheet risk, you don't take franchise risk, you compress risk, you make very, very healthy returns in our country. That's been our motto for ourselves, for our clients, and it works. It works not just for making money. Making money is incidental actually. It works in terms of keeping our nerves and our clients' nerves in check. You try to take risk in the Indian market. I think I remember telling you guys in an interview 2 or 3 months ago, you try to take risk in the Indian market, you're typically carried out in a stretcher.
All right, let's move on. 12,040 or 42 is the level where Nifty is still currently trading. So we've given up nearly 80 to 90 points from the top that we've seen for today. Nifty Bank is sitting with gains of just about 70 points after hitting that record high levels. But what has featured in Sharad Dubey's list with regard to the Fab 4 stocks? Let's go across to him to find out. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock is Gujarat Gas. The stock is up more than 5% after Macquarie came out with a report that it has maintained an outperforming rating for the company and hiked the target price to 240 rupees to 210 rupees. So they have actually hiked the FY21 and 22 EPS estimates between 13 to 15% based on steady volumes and better margins. And apart from this, they also expect steady sales in the Morbi plant as the management plans to augment its throughput capacity for the next 5 years. And lastly, they also expect the LNG prices to actually soften due to excess supply. Up next, we are having IIFL Finance, which is up almost 12.4%, seeing its biggest intraday gain in almost 5 months after. And today, the company itself will be meeting PE from SAF partners as well. And the next stock is Thomas Cook. Well, it has actually turned negative, but the stock did complete its corporate restructuring process today itself, in which it has actually demerged its HR business to Quest Corp. So almost 1,889 shares will be issued for every 10,000 shares in the company. And the last stock of the day is Motherson Sumi, which is up almost 2% after fresh longs is seen with a high open interest of 19% and the volumes trading at almost 1.5 times its 20-day average. Back to you.
Thanks a lot, Sharad, for bringing those Fab 4 stocks of the day. And before we go across to our next fundamental guest, pull up Amara Raja Batteries, which is surged in the session. The stock sitting with gains of about nearly 3.5 to 4%. It is at day's high on that stock. Brijesh, very quickly, a technical check on Amara Raja.
Breakout has been witnessed, and when I saw it that time, it was been quoting somewhere around 766. Now it shooted up to 770. I think one can look out for a BTST if they want to play, keeping a stop loss of 452 or say 754 or 756. Play for the target of 789.
So one can take this as a BTST play as well after the surge that we've seen. But let's bring in Sanjeev Masin of IIFL Securities, who joins us on the show. Hi, Sanjeev. Good afternoon. Well, we did touch those record high levels today, but we've come off from those higher levels. One worry about the market has been that the broader markets have not performed. In fact, so many experts that we spoke during the course of the day, they've said that the portfolios have been bleeding. Small cap index is still 40% lower than its all-time high levels. Do you think the mid caps now from current levels are poised to outperform in the next 1 year?
Yeah, hi. So firstly, congratulations on a new high, which has come against all the pessimism and all people on the fence and people doubting it, including all the TV anchors and the analysts. So the simple saying is you had to be invested in the last 4 months. There is no magic wand that suddenly you will appear in the market and you'll start buying. Only the people who saw the pain will see the gain. And we've been one of the few who've been saying from 3 months that this market is going to surprise everyone on the upside. A. B. You can't run with the hares and hunt with the hounds, that you'll just stay with 20 stocks and you think these will keep multiplying. At 60, 70 time, I think it is about time the levers and the Nestles of the world will be now just range bound. I am extremely positive on the broader market. I think 2020 will belong to the mid caps. It will be an even more startling rally than you saw in 2017. So yes, a lot of portfolios are in the red and so on, but that's the nature of the market. Every year cannot be a market where you will get astounding returns. So we've seen 2.5 years of weakness. We think 2020 will be a game changer. And the only caveat here is please stay invested.
And that's proved fruitful up until now. So what's going to be the landscape of the investment mood when we come to 2020 in terms of the mid caps? And like you said, obviously, if you need that additional kicker, it's not going to come from your, you will obviously get stable returns, but that big leg up is only going to come from the high beta pocket. So what do you feel the color of investment or the flavor of investment from that mid cap arena is going to look like?
Yeah, so firstly, you will have to have conviction, Devina. Nothing happens overnight. We've seen the worst of the storm pass by. I think you are aware of the slowdown in consumption, investment in exports, but that's all turning. Firstly, we are extremely positive on the global, interim trade deal, which will see a lot of rush in the commodity side. Secondly, we think the lower cost of money and rate cuts by the RBI will see a transmission as the mistrust gets allayed. And thirdly, we think consumption spending after this, Diwali festive season 2020 should bode very well. Fourthly, you are coming from a very low base effect. So I think all the 5 C's, that's corporate banks, construction, capex, and the capex stocks, these 4-5 cement, these will be the key which will drive markets. Now in that, the large caps are already maybe overstretched, but we think some of the mid caps in banks, in corporate banks, in cement, in OEMs, these will all do exceedingly well as you get through this rough patch. And like I said, the only caveat is that you have to be in quality stocks and stay invested. So either you do it through the mutual fund routes or you do a SIP or a PMS. But direct exposure into 1 or 2 stocks will not make money. So be in a basket of stocks or sectors.
One C there, Sanjeev, and that's consumption. Does that feature too?
Yeah, consumption also, and particularly discretionary. I think autos are going to be in fine shape. You've already seen maximum pessimism now rebound in a very, very strong way. Eicher Motors from 16,000 is up to 23. Maruti is up to 7,300 from 55 and so on. I still think, the likes of Eicher Motor, Ashok Leyland, Maruti, Mahindra, Hero MotoCorp, these are going to be quality names in 2020. As you see this BS46, the inventory overhang go out, you'll see more lending as the cost of money falls, and aspirations are again back as far as owning autos. So I'm very, very positive on discretionaries in discretionary autos on the consumption side. Some of the durable stocks have also seen exceptional weekend, the likes of Havells. We think they'll have a startling quarter on the back that in North India, you are aware of the air purifiers and the advent of ROs being extremely strong in demand. All that should bode well going into 2020.
Okay, so those are some ideas coming from Sanjeev Bhasin. Let's mark few stocks. Future Consumer has gone up in trade in just last 15 to 20 minutes. That stock's trading now at 12. It's up 12% at 26. Aditya, on the charts, what do you make of the move?
More of a dead cat bounce underneath. If somebody is long in the stock, probably look to exit somewhere around 28, 28 and a half. My sense is stock will face stiff resistance around those levels of 28, 29.
Okay, and the other one which is moved higher is Shree Cement. Now remember, the company concluded its QIP recently, and the QIP was done at 19,300, which was also at a discount of 2.5% to the floor price, which was fixed by the company at 19,800. 21,000 is the level where Shree Cement currently trades. Sanjeev Bhasin, talk about the cement space as well. Now this is one company which has been debt free, and this was the first fundraising they have done since the time the company got listed. It's an expensive stock like Ultratech. Would you take a bet in any of these cement companies?
Yeah, I just pointed out that cement would be my outperforming sector, given that we've had an elongated monsoon and we think price rises are across the board. Like you pointed out, like MRF, Shree Cement was a stock which has never diluted equity. This is the first equity dilution they've done, and done it on a royal premium. If you are not aware, but Shree Cement is the lowest cost producer of cement, not in India, in the world. An extremely profitable and extremely well managed company. But I think, the large caps, you still have Ultratech, ACC, and Shree Cement, which will take the cake over there. But I would put my money on a stock like India Cement. We've seen the southern side see a rise in prices over there, and India Cement at this 78, 79 has enough risk reward for a 40% upside. So like you said, Shree Cement is under our coverage as a disclosure, and we think India Cement, Ultratech and ACC, that whole basket should do extremely well come 1st of January onwards.
Okay. Just one quick chart check before we toss it across to, our dealing room check, and that is on Bharti Infratel and Bharti Airtel, if we haven't already done that. Just want to bring in Brijesh on either of these two names, Bharti Airtel or Bharti Infratel now. Brijesh.
I'll go with Bharti Airtel. Stock is looking weak right now after making a recent swing high of from 455. Stock has been beaten today. It indicates a little bit more downside. So I would be playing with a stop loss of 436 or say 437 and go for a sell side and look for the target of 424, 425.
That's on Bharti Airtel at 432, seeing some profit taking after yesterday's big move. Bharti Infratel too looking weak in today's session. But it's also time now to take a look at what dealing rooms are recommending this afternoon. Yatin Mota and Darshan Mehta are here with the channel checks. Let's start off with you first, Darshan.
Yeah, so some of the pharma stocks, except for Sun, have been doing well. Lupin, for one, is something that dealers are talking about today. Has come off the day's high, no doubt, given the fact that the market has actually cooled off. But some of the foreign funds have been active buyers in Lupin. It was trading over 810 in the morning trade, so there was accumulation that was happening. Decent volumes today also. The other one is Just Dial, in which and has rallied over the past few days. A couple of foreign brokerages are actively pushing their stock to their clients for a positional buy. So Just Dial is one, and today also the Citi midcap report came in which they had a target in excess of 700. And DV's Lab trading at a fresh 52-week high. Dealers believe that the momentum will continue on the counter, but yet another few more stocks.
ICICI Bank is one stock wherein dealers are recommending a sell today, buy tomorrow kind of a strategy. Given the fact that today, the MSCI buying ebbs, dealers do expect some bit of profit taking which can happen in the stock at the current levels. Remember, since level of 450, we had the news of MSCI moving post inclusion and the weight increases. We have seen most of these MSCI names run up 10 to 15%. So ICICI Bank is something wherein dealers do expect profit taking at current levels. Watch out for Ujjivan Financial as well. Stock has been active. Remember, the Ujjivan Small Bank IPO is anytime due, and probably ahead of that, a lot of HNIs are buying shares of Ujjivan at this point in time. And finally, Jubilant FoodWorks is another counter which is quite active in the future and option segment. Dealers do indicate that in the cash segment, a lot of these FIIs have been aggressive buyers for the trade today.
But it's showing, thanks a lot for that, Yatin, as well as Darshan, but it's showing in the way Jubilant FoodWorks has done well, and that stock is trading at life highs for itself, along with stocks like ICICI Bank and even a Divi's Lab. Now, well, we spoke about what consumption names could do. Sanjeev, Jubilant is that poster child, yes, but there is this whole talk of the Burger King IPO, and in line of that, whether Westlife, which is arguably a much larger franchise, can gain some more headroom. It's a stock that hasn't really created too much of wealth since listing, Westlife. Do you think that can change now?
No, I don't track that new name which you said. I can tell you on Jubilant, I think they've realized that they are putting in more money on the Domino's chain rather than the other franchise which has done nothing, Dunkin' Donuts. And I think that is where their change is evident, because they've seen a lot of traction on that as footfalls and margins start to rise there. So we know that the elephant in the room was the other franchise, which has of course been now mitigated, and I think they'll concentrate on this. But it also tells you that certain stock sectors have been huge outperformers, particularly staples, And that is where I will be very, very cautious. I think the broader market, if you took certain PSU stocks, the certain mid-cap banks, they are very, very attractively priced. Hence, we are saying that mid-caps now are offering you a very good risk reward of actually some of them actually going up at least 2-3 times in the next 2 years. So that is where you should be looking to put your money. These 2 months, by the way, Neeraj, have been extremely profitable for a lot of people who bought the fear. Hence, there is a return of money and you will see more risk coming on the table, not here, but globally. So I think mid-caps are in for a very, very good time in 2020.
Okay. Sanjeev, I wonder if you would include a special situation stock in this, and that is Dish TV. That's down. It's failing to recover. It is arguably also one of the stocks in which a deal could come through some time.
No, if we are playing media neither through Dish nor through Zee TV, we think Sun TV is giving you a very good entry point. Their OTT platform should start to see a lot of profitability return. They've invested in that. Their increase in market share in the Tamil side. And if there is going to be a predator on Zee, then it will definitely see the market cap of the rival also move up. We think Sun is giving you a very good entry point. And as they indicated, this could be the last quarter of lower ad revenues. We think ad revenues, spending on the media side. So Sun gives you the best franchise at this 480 level, 470, 480. We are using that to buy Sun. That would be our top media pick.
Okay, that's the top media pick. A Sun TV coming in from Sanjeev Bhasin. But just 10 minutes to go for markets to shut shop. Let's bring you some closing strategies from our technical experts. Brijesh, coming to you. You've already said Amara Raja can be one of the BTST, but is there any other play?
Another would be Bharti STBT, as I've said, 430 to 431 the stock has been quoting. So keeping a stop loss of 436, look for a sell side, look for the target of 424, 425.
Okay, STBT and Bharti Airtel. Aditya, what about you?
So I'll go long on MCX. Stock is showing strength in trade today, and it's on the verge of a breakout from a consolidation. So at levels of 1190, 1188, I'll go long for targets of 1300 with a small stop loss somewhere around 1140, 1150 zone.
Okay, and there is some buying which has come in MCX. Besides that, I think even Bandhan Bank has moved higher in the last 5 to 10 minutes of trade. If you could just pull up the chart of Bandhan Bank, it's 2.5% higher. What do you do here, Aditya, on the charts?
Yes, it's looking attractive with the charts. I would not shy away from taking a BTST in Bandhan Bank as well for targets of 575 and 590 on the upside with a stop loss at 540.
Can we actually have the 52-week chart of MCX? I suspect that this would be near about 52-week highs for the stock and quite pillar and post in terms of performance for MCX vis-a-vis a Bombay Stock Exchange. There's just a wide chasm of performance differential between the two exchanges which are listed and available. Sanjeev Bhasin, we've been talking about how some of these businesses which are monopoly in nature could do well. A lot of arguments made for CDSL, a lot of arguments made for MCX as well. In these kind of businesses, there is a cards IPO from SBI Stable which is coming up as well, but that's not listed as yet. But in these businesses, do you like any? CDSL, MCX, BSE?
No, MCX had a very good opportunity about 2 months back. It was available for a song, and that's telling you that surprisingly some of the mid-cap stocks have given you huge return. It includes the likes of Vodafone, Bharti, the corporation banks and the IDBIs of the world. They are up 40-50%. So MCX was beaten black and blue, and it's definitely come back. But Neeraj, let's take some 4 or 5 pedigree names which can give you 25% in the next 6 months. Look at likes of GAIL, Hero MotoCorp, ITC, HDFC, IndusInd Bank, Tata Steel itself. I think these 4 or 5 stocks can be huge outperformers. So there is a lot of money stocks sitting at having not done much, and where the variables now are turning extremely positive. So as a disclosure, GAIL, Tata Steel, HDFC and IndusInd and Hero Moto, these are some of our top picks. We think the risk reward here for a 25% upside by next Diwali is very much on, and they are large caps in their own phase and in their own sectors are doing extremely well.
Okay, Sanjeev, we'll watch out for some of these names as well. A couple of them might seem contrarian, the likes of GAIL, etc. But let's wait and watch how they go. Maybe contrarian buys also play out. Thanks so much for joining in today and giving us your thoughts. That's the view from Sanjeev Bhasin of IIFL. Keep some of those names at the back of your mind. We've got a bunch of recommendations in the session today, I must say, but the stock which is really doing well is ICICI Bank. It's topping the charts. It's closing the day at near about the highest point, and which is always a great sign for a stock. Now, my question out here, Aditya, is that yesterday a lot of people who were there on the show mentioned that Axis looked a lot stronger than ICICI Bank on a relative basis. Today, as ICICI Bank has just outperformed every other stock by a margin. From here on, if you were to bet money afresh, would you bet it on ICICI Bank from a trade perspective or Axis Bank? Keep in mind, we are 2 days away from expiry.
So I would bet my money on Axis Bank for sure. Purely for the fact that ICICI Bank has already moved up 4-5% in trade today. So my risk to reward at current levels, which is up 4%, is not in favor of going long. On the flip side, Axis Bank hasn't moved much. It's flat in trade today. My risk to reward definitely would be in favor of going long out here. Targets would be somewhere around 775 to about 780 on the upside. With a stop loss at 730, my bet is on Axis Bank, not on ICICI Bank, because it's already moved up 4% today. I don't have much of a fillip out here as far as ICICI Bank is concerned. On the flip side, Axis Bank, yes, it can give a move day tomorrow or probably day after tomorrow.
Okay, so watch out. Maybe Axis Bank is something that Aditya believes, but ICICI Bank clearly ripping its way in the session today. Vijesh, for somebody who was long on the likes of, say, Tata Steel, is it prudent to take some profits off the table?
Tata Steel right now has a resistance at 440, 442 odd level, and if I'm not mistaken, today's session stock had made a high of 429 or say 430, and after that it went down all the way to 418 around, and later half, and after that it has bounced back. Chances are that better to, if you are able to get some profit, better to book some profit. But this expiry, which I have been witnessing, 440, 450 would be the tough hurdle to cross. Anyhow, if we look out for the December series, and if we trade somewhere around 415 or say 410 odd level, definitely one can go for a buy side with keeping a stop loss of 400 and play for the target of 470 to 480. But this series, it looked little bit dicey to cross 440 to 450 odd level.
Okay, Godrej Properties, if you see the intraday chart of the stock, it's seen a decent enough recovery actually. From the lows of the day, it's really peaked out. In fact, now closing at almost the highest of the day at 902. Aditya, Godrej Properties?
Yes, it has bounced back, Revlinus, but I want the stock to close above 910 to about 915. That's an immediate resistance for the stock. If it manages to close above 910, 915, then I would take a long trade. Or probably if tomorrow it starts to trade above 910, 915, then I'll take a long trade for targets of 950 on the upside with a stop at 200 DMA, which is around 885.
Okay, gentlemen, both of you, thank you so much for taking the time out and being with us today on the show. We'll wrap up the show post market close, and then of course we'll hear from the current Maharashtra CM Devendra Fadnavis as he gets ready to address the media. But this is how the markets are shutting shop today. I must say the banks recovered a lot of lost ground. Maybe the benchmark indices did not, but the Bank Nifty at a point of time dipped into the red midway through trade at about 230 or thereabouts, and now 200 points in the green. So good recovery for the banking stocks. Not so much for the index, but off the lows of the day. Mid cap and the small cap indices should come up on your screen. The market breadth was pleasant for a better part of the morning, but post that it just got soured a little bit and down about 1% for the mid caps, at least 0.5% for the small caps. Let me talk about the large caps first though. And GAIL, yesterday's the stock which was sulking in trade yesterday, up about 2.7%. ICICI Bank 2.5%. Dr. Reddy's and IndusInd Bank have some gains. There is gains for Hero MotoCorp up about 1%, Nestle up about 0.5%, Britannia up about 0.5%, and the HDFC Twins put on some gains. What's not doing well? Z 7.5% lower, Bharti Infra about 7% lower. A weakness in Grasim, Bharti Airtel, JSW Steel, Wipro and BPCL amongst the other names which have corrected a bit in trade today. But the broader end of the spectrum, the market breadth turned a little bit to midway through trade, Navneet.
That's absolutely right. In fact, when we started the day, it was 2:1 and it deteriorated. There was profit booking which came in from the top. But when you look at the individual stocks, it was actually a divided house. So let me start off with a couple of gainers first. Godfrey Philip, a stock which we did discuss on the show today, is closing with gains of about 8 to 9%. And technically too, Aditya said this is poised to touch its fresh 52-week high levels. The other one was IFL, which went up in trade. Good gains seen for this particular counter. It also went up on good amount of volumes with regard to this particular stock. And you also had Future Consumer look like a dead cat bounce according to Aditya, but the stock definitely saw some bit of buying interest, at least in the last half an hour to 45 minutes of trade. That's Future Consumer for you, up 12%. Tejas Network was once again locked in upper circuit. It did in partnership with Bharat Electronics. Maybe on back of that news, there was some buying, 10% higher for Tejas. Amara Raja too had a good session, some buying interest coming back into the stock counter. Remember, the September quarter numbers were good, and from thereabouts, we've seen a good recovery for this stock. Biocon among the pharma stocks was active, I think, throughout the session, and this one too is closing with gains of 2%. On the losing side, telecom stocks were weak, so you had Vodafone Idea giving up a lot of gains today, so that was down about 9.5 to 10%. Piramal Enterprises, which was up 4% yesterday, gave up all its gains today. In fact, that stock's closing with cuts of nearly 4 to 5% in today's trading session. That's Piramal Enterprises. DMart is the other one where some bit of selling came in. That stock was down about 3.5 to 4%. BHEL did not have a good session, and stocks like Remington India and SL Proprac, they've been moving higher in the last few days. In fact, both these stocks have been trading around their 52-week high level, and clear sign of profit booking kicking in today. Remington down 13%, SL down about 5%.
All right, that's what you've got. 15 seconds to market closing, but a softer close after a record-breaking day in the morning session for the Nifty. So we've made ourselves a new record to break if we do manage to scale up again from these levels. But the Nifty 50, and this is what it's going to look like. It's going to be down in the session by about 0.2%, but it's not at the lowest point of the day. 12,049 on the Nifty. Nifty Bank does relatively better. So you've got it just a few points away from its 52-week, from its all-time high that it hit in today's session. Sensex also down, but marginally flat-out move for the Sensex. Contributors comes up next. Just quickly take a look at what's moving across the board. And banks, remember today was that MSCI rebalancing that came in. So ICICI Bank saw some bit of buying on account of that. It was up 24 points. HDFC Bank, IndusInd Bank too. What lost out was Bharti Airtel, L&T and Infosys.
All right, very quickly, let's take a look at the market breadth. We were just mentioning how that deteriorated during the day, and as you can see, last half an hour declines took over the advances. And also looking at the participation, just 2 days before the monthly expiry scheduled on Thursday, you had NSE cash volumes really on the higher side. 82,000 could be on account of that funds you were mentioning, the Vina MSCI rebalance, and NSE F&O clocking turnover of about close to 14 lakh crore.
All right, and with that, it's a wrap on this edition of Countdown. From Neeraj, Navneet, myself and the entire team, thanks a lot for watching. We'll be back with the press conference with Devendra Fadnavis.